The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending November 1st, 2019. Well, let's start, as I like to, with the U.S. markets. Stocks and bonds moved higher on the minimal rate cut by the Federal Reserve, 0.25%, or 0.25 points, I should say. Was expected by the market, kind of built in, did push both the bonds and stocks higher. The S&P 500 actually eked out a close at a new record high. And, of course, the falling bond yields boosted the dividend paying stocks as banks pulled back from their recent highs. And the drop in the dollar and lower yields actually boosted the gold price. Dollar's at about a 3-month low. And with all this going on, I would expect the volatility to actually increase, but the volatility index dropped to the lowest it's been in several months. So that's basically a wrap-up of the overall markets, and it is the same theme over and over. Let's just keep this paper paradigm moving forward, and let's pretend everything's great, and let's get some new highs in the stock market, and let's keep the bond market alive. And right now, the 10-year Treasury yield is obviously dropped, but it's still in the territory that, there's believers in these markets still, and that will probably continue until it ends. And when does that happen? No one really knows. It's nice to see gold move up. I'm still going to wait and watch. One day doesn't make a market. I'm not sure it's going to have much follow through, but time will tell. All right, first up from CNBC, a quote-unquote growing club of very powerful countries is steering away from using the dollar. Well, anyone that's listening to these weekly perspectives or been a member of the Morgan Report website knows that, of course, this has been a theme that's been going on for a long time, but here it is hitting the mainstream financial press. U.S. dollar has been the world's major reserve currency for decades, but that status could come under threat as a very powerful countries seek to undermine its importance, warned Ann Coren from the Institute of Analysts of Global Security. And there's a video that you can watch. The US dollar has been the reserve for decades. Major moves such as China, Russia, and the European Union have a strong motivation to de-dollarize, said Coren. We don't know what's going to come next, but what we do know is that the current situation is unsustainable. Well, it's more than if the dollar's unsustainable, and it is, and you use some logic, you realize that it is going to end, and it's probably not going to end well. But they're not going to say this. That's my commentary or my perspective. And finally on this article, Petro Yuan may be an early warning, but if the dollar declines its influence, other currencies could fill the role traditionally played by the greenback, especially China's yuan. In recent years, China has tried to internationalize the use of its currency, the yuan. Such moves have included the introduction of yuan-denominated crude oil futures and reports that China is preparing to pay for imported crude with its own currency rather than the U.S. dollar. Yuan-denominated oil futures are also referred to as the Petro Yuan. So you've heard that before, but here it is in the mainstream press. From a site I frequent more and more now, oilprice.com, this article, The Shady Truth Behind the Aramco IPO. And this is very interesting. I'm not going to read the whole thing. I'll just point out a few highlights. I do suggest for this weekend or early next week that you do take a harder look at this article. One thing that professional bank and fund traders know that others may not is to absolutely never trust the credit rating agencies in making trading decisions. The reason for this is simple. The credit rating agencies are paid to give a rating on the creditworthiness of the very company that is paying them for that rating. This cozy arrangement, and the agencies gave ratings to countries, companies, and asset issues, was a principal reason why the U.S.-owned Financial Crisis Inquiry Commission, set up by Congress and the president in the aftermath of the great financial crisis that began in 2007-8, concluded with the failures of the big three credit rating agencies, Moody's, Standard & Poor's, and Fitch, were essential cogs in the wheel of financial destruction. If you've ever watched the movie The Big Short, it was spelled out very, very well in that movie and very accurately. This article goes on to talk about that. That's the essence of this IPO. It may turn out to be pretty much of a dud. Further down the article, an oil glut is looming. Having said the Fitch Aramco downgrade was from the somewhat extraordinarily high A plus level to A, well, quite a drop. But at least the agency did note that there would be an effect from the 14 September attacks that had slashed Saudi Arabia's production by 5.7 million barrels per day. It also downgraded Saudi Arabia the month before to A due to the vulnerability of Saudi Arabia's economic infrastructure and continued deterioration in Saudi Arabia's fiscal and external balance sheets. And let me add that even though this quote-unquote oil glut is here and blah, blah, I want everyone to realize, and I'm sure that most of you do, that it's still a tinderbox potentially over there. And the oil price could ignite literally on fire as a metaphor, basis something, an external event, such as what happened there when this took place. In fact, I do write an energy report. We'll be shutting it down in January. I'll be adding some energy issues to the Morgan Report over time, but I digress. To come back, this is something that could, you don't want to bank on, cheap oil or the current situation. It could change literally overnight. I still think the precious metals and probably energy are the two best places to invest going forward. I'm not that bullish on the overall commodity sector getting a huge lift, although the agricultures that I say almost every week will, because there is some weather issues and some crop problems coming in the not too distant future. And of course, all eyes from our consortium of people that follow our work, meaning myself and many others like myself, Peter Schiff and Martin Armstrong and Jim Sinclair and many, many others, have our eye on Deutsche Bank. And of course, this is from CNBC again. Deutsche Bank posts 832 million euro loss amid major restructuring plan. Our net loss is a little better than our internal planning, Deutsche Bank CFO told CNBC. Earlier this year, Deutsche Bank announced a wide restructuring plan in an attempt to revive its business. Shares of Deutsche Bank were down about 16% from a year ago. Reported net loss that missed market expectations on Wednesday as a major restructuring plan continues. You can read it. Not really much news. This is kind of old news. We're all kind of waiting for the other shoe to drop, but it's being propped up. And whether or not it can be saved or not remains to be determined. And this is from the GATA website. This has to do with derivatives danger may have gotten too big for central banks. And this is from Jim Rickards. It's actually a video, which I'm not going to play on my video. It doesn't come out well. But dear friends of GATA and Gold, for some big financial and geopolitical commentary, it might be hard to do better than the interview conducted a few days ago by comedians, and I'm going to mispronounce this, the economists Stan Kishin and Francis Foster, with author, economist, consultant, and gold advocate James G. Rickards. I have to say, and I know I say it often, but Jim is one of the few that I think is really a clear thinker and articulates very well how he arrives at his conclusions. I mean, this chaos theory is right in line with my thinking and others, and it's about being accurate in the markets and being truthful in the markets. So having come from long-term capital management, I find it a bit ironic that he is where he is, but that's great. I think he does add to the conversation in very meaningful ways. If you have a chance to look it up, I would just type in Jim Rickards' most recent interview on video, or put that in Google, then it gives you the option to look at videos. And I'll wrap up the fact that the Morgan Report comes out this weekend. It'll be issued on the 2nd of November, which is tomorrow. I'm just recording on the 1st, as I said. And, of course, some pretty big news on my favorite specs. It's actually two companies. I only talk about the one primarily, but this is on the parent company. And this is from a technological report of someone that follows the company like I do. I have mentioned that I'm the only one, and that's really not true. There are about 2 or 3 others out there. Anyway, reading from this most recent update from this other, let's say, analytical group, they first introduced this company back July 6, 2017, and long-term holders have done well, but not without a true test of their investor fortitude. This company and its JV partner, which is the one I talk about all the time, are technology companies on the edge of their science. In scientific discovery, delays are simply part of the process, even if they are not part of the well tolerated by the investment community. Today, it's much easier to make the case that they're both in a better place than when they first issued a recommendation to buy the stock. More specifically, the de-risking that took place with the building of the 2.0 plant is barely reflected the current price. And what I'll say is what's interesting is the stock almost doubled very, very recently on some pretty significant news that broke, and the fact that they're establishing, a hard asset, a plant that's going to produce fairly significant amounts of gold and silver relative to the size of the plant. Certainly cheaper than any mine that I'm aware of ever. And this has moved the stock from like 10 cents to 18 cents. It looks like it's going to consolidate a little lower than that. I think there's still plenty of time to get in here. There's not very many following the stock. This one group that I'm reading from their report is not very well followed. The Morgan report's probably as well followed, when we're not anything close to what the Agoras and Porter Stanberry and the Casey groups, all those have probably 10 times as many people that pay for their research that come to ours. But regardless, just some good news for those that are members of the Morgan Report, and for those that like to follow these weekly updates. I will be back with you next week. Remember, I really believe this is going to be one of the biggest shifts ever in the financial markets, as far as having the opportunity to do quite well, or having the opportunity to get, I wouldn't say wiped out, but significantly reduced, depending on how you position yourself now or shortly thereafter. No one knows the exact timing, but it's better to be early than late. I'll leave it at that. I'll be at the New Orleans Gold Show. I'm speaking the last day on the last time slot, which means the 4th of November. I think it's 3 or 4 in the afternoon. And if you happen to be at that event, please do come up. I'm very friendly by nature, and I always like to meet people that listen to my podcast or have some affiliation with the Morgan Report. So I'll leave it at that, and I'll be back with you next week. Hello, I'm David Morgan, publisher of the Morgan Report, and as some of you may already know, the Morgan Report is about money, metals, and mining. In fact, we cover all resources, from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in the Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter: to-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets, and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You'll understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.